Banking has definitely gotten a whole lot more interesting over the last, I'll call it several weeks with the, collapse of Silicon Valley Bank and then also Signature Bank being closed as well. We've seen First Republic, a bank that was, I'm going to say was doing pretty well. It was a strong bank, well-known bank, especially here on the West Coast. That plummeted, about 50% in a single day. I mean, the bank collapse definitely kind of shocked, I think, a lot of people. But one thing you got to understand here is the financial system, I don't believe is going to crumble by any means. I think this is really quite concentrated on just a couple high risk banks that we saw there with, again, Silicon Valley Bank, Signature Bank. Silicon Valley Bank, they had a lot in venture capital. They had a very quick bank run that people were trying to get their assets out very quickly. That kind of caused the collapse there. And then Signature Bank, they had I'm going to say a decent sized exposure to crypto. Crypto has not done well over the last year, 2 years, we'll call it. Now, what this has done, though, is I think it's created opportunities, especially in the financial sector. I think the big banks here, I think they are doing quite well, and I think they could, in fact, be beneficiaries of the whole concern that we're seeing. What has really come to light is kind of bank accounting. There's been a lot talked about when it comes to assets that are held to maturity and assets that are available for sale. This has come about as people have become concerned with banks' balance sheets. But the thing that you have to understand is banks won't have to liquidate these assets that may be underwater as long as they don't have bank runs. And I just don't foresee that happening with the big banks there. And we've seen some pullbacks in the big banks. And I really think that now is a good time to be looking to add a good financial company. Now, it's not going to be all rosy. It might not go up right away, but the banks do start reporting next week. I think if we get good news from the bank earnings, we could see some pretty darn good results there from the stock prices. Now, if there are some concerns, again, it might be a short-term blip, but I do think longer term, there's some great opportunities. One that I wanted to take a closer look at today, in fact, was Bank of America. Bank of America, again, they are one of the larger banks out there. And the thing you have to understand is that just because I say I like a company like this doesn't mean it's going to double or anything crazy like that over the next year. But I'm looking 2 to 3 years from now, if we can average, again, maybe 8, 10, 12% on a company like Bank of America. I mean, that's what I'm thrilled about when it comes to investing. So with that, let's take a look at the numbers for Bank of America. Again, they are a diversified bank. You see short percentage of float, just 0.8%, institutional ownership, 71.7%. Looking at the valuations right now, price to earnings 8.7. It is above the industry average of 7.2, but gosh, paying around 8-9 times earnings, that's a pretty darn good value. Looking at the price to sales, 2.4, also above the industry at 2. Price to book value is 0.9. The price to tangible book value at 1.3, below the industry at 3.5. I mean, that's just a phenomenal valuation when you're looking at the tangible assets for this company. Nothing there for price to cash flow. I'd have to look a little bit closer to see what's going on there. And then a PEG ratio going forward, 2.5, also very attractive. Looking at the earnings growth over the last 1 year, you see is down 9.1%. Over the last 5 years, though, earnings have climbed 13% per year. Sales over the last 1 year up 6.1%. Over the last 5 years, average 1.5%. The 5-year estimated growth rate going forward here, about 3.4%. Positive to see a positive number there for earnings estimates. You do get a nice dividend yield here of 3.2%, and the bank only uses 26.8% of their earnings to pay that out. You can see that has climbed 4.8% over the last 1 year, and actually climbed on average about 12.9% over the last 5 years. Bank has also bought back a good amount of stock. Their buyback yield here, 2.3%. We should get some capital allocation plans from the big banks here after they complete their stress test. I believe that comes out in June or July. I am a little bit leery of seeing robust capital return programs for shareholders, just kind of given the situation that we've seen with banks. But I do think the big banks do have the ability and the available capital to implement very generous shareholder return programs. I just don't know if it will fare well for many regulators, and government officials might frown upon that. I'm not going to say that's a positive or a negative, given kind of the long-term objective here with looking at the stock, though. Now, looking at the balance sheet, banks, again, they do have a different type of accounting, as deposits are actually liabilities for the bank and loans are actually assets. So it's a little bit reversed. So I'm not going to spend too much time on the balance sheet here. You'd actually have to go to the 10Q, 10K, really kind of dive into the nitty gritty of the details for the bank's balance sheet. Looking at the current price, though, for Bank of America, $27.84. See the 52-week high at $40.40. That was hit last year. 52-week low, $26.32 as well. So right around those levels. You see year to date, not done well, down about 15.4%. That, again, is something that intrigues me. I always like to look for things that are out of favor that people aren't as interested in. And again, the banks right now, people are concerned, could be a good opportunity. Now, going forward for Bank of America, I go to December 2024. I do see estimated earnings of $3.52. What is the target sell price here? About $58.43. Very nice when compared against the target, or not, excuse me, not the target, but the current price of $27.84. I mean, it trades at a forward PE of under 8. I mean, that is just phenomenal valuations. This is the type of opportunity you want to be looking at when you are looking at investing. It is a contrarian type viewpoint, but I do think, again, 2-3 years from now, the big banks are going to be in a good spot. Rising interest rates should help what they're able to loan money out on, but they may have to start paying higher amounts, higher percentage yields for their deposits. But this is where the big banks, I think, will benefit, because people have had this flight to safety, and the big banks have that kind of allure because people feel much more comfortable. So rather than having to pay, let's say, a 5% CD, they might be saying, hey, we're Bank of America, we're only going to do a 2-3% CD because we have that safety effect on it as well. So that should help with their what's known as their net interest income and their net interest margin. So overall, I think Bank of America, the big banks, it's a great place to be looking right now if you're looking at investing. If you want more information on our investment firm, though, interested in our investment strategy, please visit our website, smartinvesting2000.com, or found the video interesting, helpful, be sure to subscribe to our channel, as we'll be sure to be doing more videos going forward.